Hi friends, today I'm going to review about Indiamart Intermesh Limited. I know you are familiar with Indiamart. Indiamart is the largest B2B e-commerce platform in India. It has around 60% market capitalization of B2B market. So initially, this is a new tagline of Indiamart, which actually says that whenever you are with Indiamart, your business efforts are being simplified. I'm beginning with a story how the Indiamart began. It was all started with Dinesh Agrawal, who was an engineering graduate. After graduation, he went on to work with HCL. He went on to work at US, where he was working as a net consultant. And during those periods, he experienced the internet penetration in USA. So he realized that there is a huge potential for internet-based businesses, not only in US but in India as well. So he returned to India, and he back in India he started a firm, Intermesh Systems, which were actually making websites. They were they he started a website designing firm basically. So after designing websites for many business firms, especially their initial clients like Norula, Jindal Steel, and so on, those days it was only one page website, because in even in India there were only 15,000 internet users. So I'm talking of a story in 1990s. I mean 1990, near to 1997. So initially he started building websites for businesses. Later he started building a website for travel planners. So later he thought, why not build a business aggregation, or a business directory, online business directly, just like Yellow Pages online. So based upon that thought, there happened the Indiamart. So when he was about to launch an export-oriented portal, the initially Indiamart was actually oriented towards exporters, catering to exporters towards USA. So anybody who wants to get a buy lead from USA, just log on to Indiamart, and log into Indiamart, and you will get details about the suppliers back in India. So at that time, he was about to. This was a press release given by Indiamart at that time, at September 15, 1997. So through this press release, he tried to convey the idea that it is a virtual 3D featured gallery. So at that time, the concept of e-commerce and listing of homes is not familiar. So he, as an entrepreneur, he was trying to give an idea that it was a 3D gallery, just like physical trade shows happening in around Delhi and so. So three three events actually changed the course of Indiamart during these days. I mean, from first day they were getting revenues, but later on their business is going up and up. But later there were hurdles. So three events actually made some hurdles for the Indiamart. One event for was 9 bar 11. Next one was dot com bubble. Third one was the financial meltdown of 2008. So after 9 bar 11, US actually imposed some strict rules on exports towards US. After dot-com bubble, there were much hate sentiment towards domain-based businesses. And in 2008, there was a financial meltdown, and whole business was affected. So, due to these three events, he thought, why not reshape the entire export-oriented portal towards a B2B domestic-oriented portal. So there happened a domestic focused portal. So, as a recap, I am giving a timeline. I'm giving a timeline because I want to also introduce you various features on Indiamart website. So, in 1999, they registered as Indiamart Intermesh Limited. They launched Trust Seal in 2003. Trust Seal is nothing but they are giving a trusted verification from IndiaMart. So if any supplier got Trust Seal means that any client who you want to buy something from the supplier can trust them when compared to other suppliers who doesn't have a Trust Seal. 2008, I told you they shifted focus from export business to domestic B2B market. In 2008, their costs were going up, real estate costs and employees costs. So they raised around 10 million from Intel Capital. 2009, they launched request for quotation feature of IndiaMart, also called Buy Lead. It is nothing but any buyer who wants to buy something from IndiaMart and doesn't want to search through so many suppliers. So he just put a quotation, describes all the specification, and it will be available for many suppliers who can bid for it. 2010, they launched premium number service. The idea was the supplier will never miss a call from a client. 2012, they launched a mobile website app. 2013, they launched a price discovery service. 2015, they launched a behavioral matchmaking feature. It was nothing but uh, based upon buyers' location in many buying features. The algorithm will be choosing the right supplier for him. So it is based upon the algorithm in IndiaMart. So in 2015, they launched behavioral matchmaking feature. 2016, they launched a mobile ERP system for IndiaMart. 2017, they launched payment protection program. It was any buyer who wants to buy something from IndiaMart can buy it without a hesitation through IndiaMart payment facilitation, because your money won't be lost and you won't be cheated, and IndiaMart guarantees that. So this program launched in 2017. 2018, they launched a lead management system. It was something like a CRM system for SMEs, where you have so many leads. In the same page itself, you can send multiple replies to multiple leads, and you can have a market automation features onto it. 2019, they gone public with the IPO. They raised around 440 crores at the price band of 918. I don't remember exact price, but around that. So right now I am giving a comparison of IndiaMart with Alibaba. You know Alibaba. Alibaba is the largest e-commerce B2B platform in the world. So it became the largest B2B platform by catering to the Chinese suppliers, uh, for the world. So, because China is a great manufacturing ecosystem, it was easy for Alibaba to catch on to the flow, and they made it big. So Indiamart had the same opportunity to make it big from from the domestic market, and if India makes onto India further develops as a manufacturing ecosystem, it will definitely benefit India as well as Indiamart. They have around 6 million suppliers listed on it. In previous slide, I have explained why it is significant for India. So, uh, China is central to global supply chain. Right now, due to COVID and COVID pandemic situation, the whole supply chain system has been reshaping and de-risked, and many sourcing nations are actually changing their sourcing from China. So countries like Vietnam, Thailand are coming up. So it's a good opportunity for India too. So there are programs like Atmanirbhar Bharat, price linked incentives can help for India to become a manufacturing giant. But only issue is the manufacturers should improve their quality standard, and costing is a key. So uh, like their old tagline, uh, the global gateway to Indian marketplace. If India becomes a manufacturing giant, India Mart will work just like Alibaba. So it is very significant for India to have a good portal like India Mart. We are going on to the revenue. Revenue, they have in the revenue lineup, they have two kinds of revenue. One from subscription packages, they create websites, microsites, and catalog, and they have around 1.48 lakh paid suppliers on the platform, and they have value added services like banner ads, specialized listing, and other specialized advertising features. uh, so previously, the revenue from subscription packages was around 80 to 90 percentage. Right now, it is down to 60 to 70 percentage, and the revenue from value-added services comes around 30 percentage. So there is a, I mean, many listed subscribers on the platform are moving on from a normal listing to the value-added services. So they are improving their bottom line, and they are catching up. And while we look at what are the costs for India Mart, so any internet companies, they should invest first into the infrastructure. I mean the digital infrastructure. So in those phases initially, is they had to invest like anything. So in order to achieve a critical mass, and later on this critical mass will be self-sustainable, and they will be start monetizing the platform. So in the India Mart case, India Mart has crossed this phase, and around right now, around 32 percentage of company's cost is attributable to customer service. So servicing everything the customer needs uh, gets around 30 percentage of the near to 30 percentage of the cost. Previously technology costs were high. Right now it is below 20 percentage. That's why I told you that initial India Mart has actually crossed the initial phase. There are some interesting facts. In 2006, they achieved their first 10,000 clients. Right now, India Mart has around 3,151 employees and 33 offices across country. And India Mart has a deep moat. For anybody who doesn't know, moat is nothing but a unique selling position and kind of monopoly in the market. I mean, first mover advantage. You can say it in multiple ways. So it has a deep moat in the industry it operates. And currently the company is in a full swing after COVID pandemic happened. Many small and medium enterprises are actually choosing the internet way to market and get customers. So they are experiencing a EBITDA margin of near to 48.4%. So previously they had more adoption in metro cities. Right now, tier second and tier third city adoptions are going up, and 60% of sellers who are listed in the platform have at least 1 to 10 crores from the platform. They expect around 5,000 customers addition in every quarter. So a good thing about as a company about Indiamart is they have negative working capital and a very good asset light model. Like they have upfront collection from the subscriptions, so they have the money with them. So unlike any company, they have a negative working capital, which is a very good indicator in the market itself. That's why their stock is also going up. And previously also I had said that they have moved from investment phase to monetization phase. They have around these subsidiaries. Uh, the main subsidiary I had to highlight is Tolaxo Online Private Limited, which was nothing but B2B market, where the company would be listing many industrial products. So mainly the products available would be like safety shoes and industrial products. So it was started by the co-founder of IndiaMart itself, but after demonetization, the business hit, and right now it is running. And they also invested into two startups, Procmart and Vyabar. Both of them are very good startups. And Vyabar, it is a online accounting firm, so catering to small and medium enterprises. They invested around 36 crores. Now we are looking onto the shareholding pattern. Promoters holds around 52%. In September 2019, they held around 52.3. It's only minute difference. So major shareholding is held by the promoters itself. Out of them, Dinesh Agrawal holds around 29.64 percentage, and the co-founder Brijesh Kumar Agrawal holds around 20 percentage. And FIAs actually increase their holding in IndiaMart. So you can also see why the IndiaMart stock is also going up. And DAA also increased their stake in the company. They have improved their shareholding from 3.6 to 5% recently. But but the fact is, the public shareholding has actually come down. That might be the reason that the share price is going up and up, and a lot of people might be taking profit from that. Now I am going on to the financial evaluation. So this is a single snapshot about IndiaMart financial. And right now the market capitalization is near 24,000 493 crores. uh, Within 1 year actually it moved to that levels. Previously it was below mid cap. so around 4,000 crores. So you can see the effect on how the current market price went from around 2,000 to 8,000. It's a four times jump. So it was at as low level as 1,064 641 rupees, and we it went as high as 9,952. It has a book value of 139. Based upon book value, it is highly overpriced. So with 139 book value, you have a price of 8,066. So it has a price to book value of 58 times. The stock also has a price to earning ratio, which is also very high at 91 times the earnings that it makes. ROCE at 83 and ROE at 67, both are very good. And last previous year 2020 financial year, they made a sales of 660 crores, and with a proper operating margin of 44 percentage, they made a profit of 268 crores, which is fantastic. And they had a sales quarter of 174 in the previous quarter, and they made a profit of 80 crores. You should see, out of 174 they made a profit of 80 crores. The EBITDA margin is near to 50 percentage, which is remarkable for any industry. They had a EPS of 92 rupees. uh, But if you see industry P itself, 1,266. When you compare with industry P, India Mart is still undervalued. I would go on to peer comparison where I would actually look at that facts. And now we are going on to the investment returns. Uh, you can see from 2015, the the total revenue has been steadily increasing from around 180 to around near to 700 crores in trailing 12 months. So the revenue has been steadily increasing, and profit in 2015, 2016, 2017 it was negative. One reason behind that was company was actually investing highly into technology, and employees costs were high. I have given you the real reason before itself, because as an internet company you had to invest initially into the company, then only you monetize it. In previous year they had a negative profit, and later on if you see, the profit started climbing up. And 2019 there was a dip in profit, but in 2020 2000 and right now, these months it's doing a wonderful job. We'll see how what happened in those years, and how the cost using profit and loss statement. And in you can see the employees costs and other costs were too high in 2015, and 2016 also it was too high. Later the costs were decreased to 41 percentage. Employees cost has decreased. And you can also see in 2015 it was 50, once again 51 percentage, and 2020 financial year it's only 4 percentage. So the technology, I mostly I other cost, I think it is the it is the technology cost. And operating margins also have improved over years. From minus 23, minus 45, it moved on to 44 percentage. You can see in net profit as well as EPS over years, it has been improving, and it improved to 92.45 rupees. We are looking at three kinds of return ratios: return on assets, return on capital employed, and return on equity. Return on equity and return on equity, it was actually at negative in 2017. So slowly it improved. Right now, if you look, all the three are going up. In any case, all the return ratios are going up. It's 100% assumptions that the company is performing very well, and it will do very well. And the company has zero debt. I haven't said in the previous slides, but the Indiamart has zero debt. So return on capital employed and return on equity is nearly the same thing. So for any company who has a negligible debt, and return on based upon return on assets, the company doesn't perform very well, because as it is an internet based company, it doesn't need to have too much assets to generate too much revenue. Now we are considering the risk factors. uh, we can consider about the debt position. I just now only I has said that IndiaMart has zero debt, which is a wonderful thing as an investor. When you find zero debt companies, so because they have zero debt, we don't have to consider the debt to equity ratio as well as interest coverage ratios. And another thing is they have around 740 crores on their cash reserves. Company also had deferred tax assets against unused tax losses in previous years. So they will be using deferred tax assets in from financial year 19 to financial year uh, 25-26. So we assume that the profits will be going up for in the coming future. If the companies also does well, the profits will actually zoom up. And even though they don't have a debt, they have something called a compulsorily convertible preference share. They have issued in previously, they had around the aggregate value of Indian rupee 1.92 billion, and the company needs to buy back those convertible preference shares at the fair market value. So uh, so this share buyback obligation had had an effect of 3.73 billion on balance sheet as on 31st March 2008. But these CCPS were converted to equity share in September 2018. So there were those share buyback obligations were complete. Now we are looking at the valuations, basically about whether as a investor whether you should buy into IndiaMart or not. uh, Previously, this is the book value. I have said about the convertible preference shares they had. Because of convertible preference share in their balance sheet, their net book value was actually negative in 2017 and 2018. And later, when they converted the convertible preference shares, their book value actually improved. And from 2019 onwards, the book value has improved from 55 to 95 and 139. And price to book value, the based upon the valuation how the share was uh, listed in stock market, it was ideal actually. Any investor should have purchased IndiaMart shares at that time, would have been made huge profits right now. So it's only 0.86, and even in 2020 it went up to 0.32, highly undervalued. Right now it is highly overvalued at 58 times. Price to book value is at 58. The same thing, price to earning ratio is currently at 91.2, which is very high. But considering its high EBITDA margins, uh, it's still okay. And price to book value is very high at 58. We are going on to SWOT analysis, peer analysis, and we would look at the price charts and give you my insights about the company. So, as the strength as well, uh, previously I said it's a company with no debt, and it has closed their investment cycle, and they are monetizing it. So all the return ratios are in very good, and EPS growth is going up. TTM EPS growth is also going up. Uh, the net profit with increasing profit margin quarter over quarter and year on year. So everything positive for Indiamart right now. Only negatives is promoters decreasing their shareholding, which is very okay because they have held around 52 percentage shares. But as threats, opportunities, you actually as an investor you should find it out whether it's an opportune moment to buy it. So right now they have an increase trend in non-core income, and the PE ratio is too high. Price to book value is also too high. So both these are threat factors. As an investor, you should consider those. Peer comparison, I am comparing with InfoEdge, which is the promoter of Naukri, and Just Dial, which is a platform just like IndiaMart itself, but they are mainly catering into customer-focused business. And Just Dial is highly undervalued. Uh, you can't say undervalued because its profitable ratios also low. It is undervalued. And India Mart is actually right now it has a PE value of 91.25, but when you compare with the PE value of InfoEdge around 3685, you can say that IndiaMart is highly undervalued still. With the industry PE value comes around near 2000. So IndiaMart is still undervalued when you compare with the industry price to earning ratios. So as an investor, you should uh, think about it. When it was listed, it was trading around 1,325 rupees, and from 2020, after COVID pandemic happened and all the business were going online in order to survey, the stock value also moved from near to 2000 to 9000. See the way it moved up. So, last, it's all about my insights. Currently, the current market price is around 8,080, uh, which has a high PE at 91, and overvalued book value, price to book value at 58. So previously also I said the stock is overvalued, but considering the P industry PE and the PE ratio of InfoEdge, which is around 3000, the IndiaMart is still undervalued. So my it's a good company. It has a good management. It has a unique moat in the industry. It has a recent high EBITDA margins, and looking for a bright future ahead. And long term investors still they can invest into it, because still it is priced ideally. But short term investors, they can wait, whether if you're getting at a lower price you can buy onto it. So this is my decision, I mean my insights. You can make your own decision when you are investing into it. So, as a disclaimer, I'm not an appropriately licensed portfolio manager. As an investor, make your own decisions, because because losses and profits what you make, it's yours and it's personal. So, give me a feedback about it.